Very much, everybody. Welcome to the afternoon session here. We've got a really hot discussion about digital identity, technologies that are being applied, especially in financial services. It's quite an interesting subject. We've got four key expertise panelists for you that will discuss what they're doing in the space because it's quite a hot space. So I'll start by asking our panelists to introduce themselves. So if we can kick off with Ilya.
Hi, so my name is Ilya. I work for SociumTrade, and we are developing a new social trading and investment platform, as well as a whole host of P2P financial services products that are going to work in an ecosystem. So this is a very important topic for us because we are working in the blockchain space, and it is redefining what authentication really does and is, how it works. And, identity theft and basic cyber attacks have been an issue over the last few weeks, so this is important for us.
Great. Hi, everyone. I'm the CEO and co-founder of Cygnetise. Cygnetise is a blockchain company that utilizes a decentralized database for maintaining and distributing authorized signatory lists. So we've been live for over a year now, so I guess there's very few blockchain companies that can say that they've actually got paying customers, and we're getting more and more. Whilst it's not a very sexy application, it's a very useful one.
Hello, everyone. I'm assuming this is a conference for people who know how to read, so you can see my name up there. I'm the CEO of Cybertonica, and Cybertonica is a risk-based authentication platform. We use machine learning and AI to look at biometrics, payments, and other interesting bits of data around the web to establish identity and risk level associated with such an identity, but we anonymize it. So we're not the China civic score, but we can be as accurate without intruding on privacy. We kind of feel like we're a bridge between the future blockchain-dominated world and today's world in identity and authentication.
Great. Yeah, name's Parker Crockford. We're with Onfido. We're helping bring our clients' digital identities online in a verified way by scanning government IDs and doing a facial similarity to make sure that that person is who they say they are in remote settings. And so we're working a lot in, obviously, the digital identity space, the blockchain, and financial services, helping them KYC their clients or their prospects in remote settings.
Thank you very much there, Parker. So I'm Steve Cook. I'm an independent consultant working in biometrics and Fintech. I currently advise banks, commercial companies, Fintech startups with navigating through the complex world of biometrics in particular. So, gents, I'm going to set an extra task for you to squeeze in as many football references as you can in your answers. And if you hear one, I want a big groan from the audience, please. So here's your starting lineup. We do have a couple of substitutions. Come on, it'll be quicker. To the conference program, but we're going to kind of kick off. I want to find out from our audience, actually, who is working for a fintech startup company right now? Can you show your hands? Have we got
We dim the lights
space?
so we can see the answer.
Yeah, let's have the floodlights up, please. Good. And what about investors? Do we have a number of investors in the audience too? One or two? Good. Okay, we'll try and marry you up later. So let's kick off with a question which I think is quite relevant to startups in particular. We've got some very young companies on the stage right now, but they're going through their growing pains of building a company. So really a general question to kick it off with is what are the benefits and also the barriers with starting a tech company in the UK right now? Ilya?
So in terms of the benefits, we're a financial tech company. So for us, it's very important, especially in the blockchain space, to be able to have professional financial expertise. There is a number of blockchain startups that kind of want to revolutionize the space without actually learning the nitty-gritty of it. And London is a great place to get that expertise. It's one of the financial capitals of the world. And if you're sort of looking for the expertise behind the tech, right, how the business logic of your financial process is supposed to work, London's a great place for that. I think I'll pass that one.
So Fintech, I guess, includes in the title financial, it's the financial centre of the world, I guess. Most of our clients are pretty much within, and a large market share within a 10-minute walk of where we're actually based. So it's pretty handy for a start. I personally come from a finance background, so yeah, there's probably not a better place to start when it comes to dealing with your customers. However, I will say it's expensive. And one of the biggest challenges we have is actually, the fin part, that's sorted. The tech part is slightly more difficult. Trying to get decent tech for a decent wage is very difficult. So because of that, of course, you need perhaps more investment than you would in other locations.
Well,
Joshua?
I'm going to say, the identity thing is, London as an identity in the fintech space has been established. It's sort of like the identity of football. You really realize it when it's coming home. You know what I mean?
Come on, big groan for this one. That was a good one.
Come on. But I think we have to be realistic also. I mean, I think the first answer to your question is, tell me what government you're going to have tomorrow morning, and I'll tell you what it's going to be like for us. And it's a bit of that. It's been a bit destabilizing. We opened our first round of investment on June 17th, which I think was the day after the vote. So needless to say, we raised no money for 6 months. So that was a little bit difficult. But what's great about it is that there are people who've been in and out of these kinds of evolutions who are in the financial markets, like you said. People I worked with in my other AI startup, which was a fin and reg tech startup a little bit before its time. So you get to know people here, and there are great networks here. And so we now have...
do you see Brexit being a bit of an own goal?
Yes, I would have to say that somebody stepped out of the box.
Good, okay.
But didn't think out of the box.
Didn't get a penalty then for that?
Yeah, I think there should be a penalty shootout at some point. I think it's happening actually right now.
Okay.
There's a shootout anyway. So I think it cuts both ways right now. But I think once things return to where they started, which is probably what's going to happen.
Right.
You're going to see, and I don't mean that from a political point of view, I mean that from a fintech point of view. I think what you're going to see is a lot of growth here.
Okay.
Because there's no way around it. The place needs the talent. They'll find a way to get it. And it's a huge, not just feather in the cap, it's a huge pile of money on Mr. Hammond's desk that comes from fintech every year.
So Parker, things are really kicking off for Onfido. Perhaps you can expand a little bit more about the sort of how your company is really penetrating the market.
Yeah, no, I think there's a couple different pieces to why Onfido's taking off, and some of the macro trends of what's happening with data and how that is no longer sacred, especially from a U.S. perspective. You look at all the hacks, and so that's really changing the level of certainty you can on some digital proofing. But the other piece is also the focus, the drive into say, look, we're going to go out and solve one problem, and we're going to focus all our effort and time on that. And with it being here in London, and especially with the boom of the fintech and being that partner very close, I don't think we'd have been able to build the platform we have today without the clients that we've grown up with, the Monzos, of this world, Revolut, as their platforms are growing, we've been able to go with them, and so that now's enabled us to go up into the big tier 1 banks, into the much larger fintechs, and crack the U.S., which was my task for the last 2 years. And so I think London gave us that really unique framework of just being down the street from some of these really fast, impressive growing companies to allow us to grow with them.
But you, if I may, but you also, like us, you're a super diverse team, the founding team, the tech team. You've got to have access to that talent, right?
Oh, no, I mean, if you look at our diversity, and I think at one point in time, we spoke 30 different languages in the business, right? And it's that ability to pull in resources, and we now have a Lisbon office, development team, and based in Lisbon, but we've had that for years ahead of Brexit and everything else. But it was I think it is certain of how to grab that talent and track them and see if they're here and pay them a half decent wage.
That's good to hear. We've heard a lot in the last 2 days about disruptive technologies, and certainly there's some elements creeping into the digital identity space. So how important is the impact of machine learning, AI, and blockchain? You referred to blockchain being your primary source in terms of platform.
So I think one of the big changes right now is the fact that AI and machine learning is allowing us to process a lot more data than was possible before. So the concept of data identity is changing, right? So it used to be your primary numbers, your date of birth, your name. It's changing to be a lot more than that because you can buy that or you can fake that a lot easier. So in order to be able to protect a transaction and identity, you need to incorporate a lot more things and things that are harder to fake. So I think the next step and what AI is allowing us to do is go to social. And that's part of the thing that we're allowing to do, right, is in our platform, we're incorporating a lot of social aspects to sort of form a trader's or an investor's identity. Going outside the norm and seeing what deviates from normal action, right? You can incorporate people's, their social activity, their daily activity into that data and see if, is that really that person? Is that really his transaction?
Yeah.
Mm-hmm. Steve, are you using machine learning in your technology to expand your e-signature business?
Not yet. It's not e-signature, but no, not yet. I mean, we're
digital signing.
Our kind of approach is to do things bit by bit. That's why we wanted to get to market as quickly as possible, build a customer base, and then you can basically add the functionality around the customer base.
So old school. Why would you not just go raise a ton of money? And
we're not on the West Coast.
I told you we had
There's a lot of startups asking for money, and these guys out here are brutal. It's like,
that's true.
I do feel very strongly about any personal data and particularly ID being held on centralized databases. That's not going to happen for much longer. Right. Even Facebook are beginning to invest loads of money in blockchain, hacks all over the place, NHS, the Facebook, everything. So basically, we're going to go to a decentralized blockchain, kind of approach. It's going to take quite a long time because I think a lot of people in the blockchain space are being far too ambitious. But bit by bit, companies, I guess like the ones here, the whole world will end up having ID on blockchain.
I just come back to what Ilya was saying, because this is actually the principle of our platform, which is basically anomaly detection. So what you're doing is you're forming sets that are very well defined mathematically, but don't involve the personality or the identity per se of the person. Yes. There's no longer a need for identity to establish things like risk levels of a certain series of performances and a configuration of data sets. So we can collect up to 200 data points, and our secret sauce is how we synchronize those data points with other biometric data, such as we have a new product coming out that manages the way someone uses their screen as a mathematical formula to determine whether it's them or their child who's making that purchase. That's just a starting point, right? But you can go very far with that type of stuff and not have to know who that person is in their private lives, right? And I think that's where I hope we'll get to, which is where identity that these guys are doing is very necessary for an Uber driver, but it's not necessary for me when I'm going into the pharmacy, right? I just want to be able to walk in and make my purchase and get out and not create wasted time in the system. We actually think of what we do at Cybertonica as partly helping to reduce CO2, because the 3DS and other forms of antiquated authentication are not needed. And the system time you have when you do 100% 3DS on purchases actually adds up. It's billions of kilowatt hours over time. So those things are going to change in favor of what Ilya was describing.
In terms of biometrics, we haven't discussed that in the last couple of days, but we've seen sort of a number of banks now deploying biometrics in user case scenarios, improving the customer journey within both login and payments. Everybody here has obviously got a smartphone. We've got a tech-savvy audience. So who is using a particular Touch ID or Face ID on their phone right now to log in? Yes. And who's using...
That's great. We got a picture of your fingerprints. Thank you.
Who's using a biometric to actually log into their bank account on their mobile phone? Who's doing that right now? Still, that's quite small. But I would say that from what I see amongst millennials, it's becoming more prevalent. It's 9 out of 10 millennials that are using a biometric component to actually identify themselves when it comes to overseas transfers and so on. So Parker, in terms of what Onfido do, they do an onboarding process. They combine a capture of a face with an ID document in that process. Just expand a little bit more how that works, because that's really taken off with Revolut, for example. You know, they've got 1 million users now using this technology.
Yeah, no, I think, you know, the place that, you know, we position ourselves is, you know, and I call it the Apple Pay problem, right? I don't know if everyone remembers when Apple Pay hit. I could have all someone's information, and I could have understood, you know, how they're going to do dual-factor authentication on me, and then all of a sudden I'm running around with your information but my thumbprint. And so where we focus in on is to say, well, where's our government-backed up database of a biometric? And that's obviously a national ID card, a passport, a driver's license. And so, you know, we're really looking at enabling that smooth transition of capturing that ID, authenticating it on our back end, and then doing a liveness and biometric face similarity to say, you know, we have the confidence that one, that person is actually there via the video, and two, you know, there is a score of your similarity to that face off your government ID. And so what that's enabling, it's moving the bar of authentication above just digital proofing, right? Now, that being said, it is a point of friction. Should it be used for every use case? No, because you will see a jettison of users. But for financial services, they almost expect that level of due process. And so, you know, we're helping them connect that digital footprint and all that other experience that they have about that user to a binary, you know, carbon-based human that owns that information.
In terms of biometric credentials, Joshua, do you see this becoming more and more prevalent within financial services, that banks really want to deploy that? You know, there's legislation on the horizon in form of strong customer authentication when it comes to payments with PSD2. If you're not familiar, that's new legislation coming right across the EU that's making payments more secure. And within that category, there is 3 criteria, of which 2 independent factors have to be evolved, and that is something you know, something you have, and something you are. And something you are is the inherent piece of the biometric component. So Joshua, how do you approaching the customer's requirements in terms of these legislative
Well, I mean, that's an involved question, but what I refer to what was just said, in a sense, what the financial institutions need is an identity when they begin the relationship. And after that, what they need is anomaly detection and transaction monitoring, like what we do on their platforms. On some big banks, we're doing that, you know, for millions of customers. And the idea is only to bother those people who actually perform a very unusual operation for who they are, right?
Yeah.
And so it's really about behavior as opposed to identity at that point. And behavior is well measured with biometrics and other inputs from the data sources we use. I remember always this one example, which was only a year ago. I was talking to a guy who's been an investment banker himself, and in his own bank, every year, he put a set amount using one particular card on his son's ISA account, and every year, he was double, triple authenticated, and then got a call saying someone's using your card to move 10,000 pounds or whatever it was.
Right.
And he actually escalated it to the president of the bank, and only got solved a few months ago, but only for him. So if you think of the friction that causes and the customer experience, then obviously neobanks are going to win, because they base themselves on Onfido, and they start on the principle, I want to create little friction as possible for my good customers. And that's why our platform often leads to like 10 to 20% increases in sales or onboardings.
Wow.
Because the friction, we have a slogan in our business called Go Frictionless. When you go frictionless, you actually give all the good customers the same type of experience. And only the bad ones have unique experiences.
Yeah. Well, the session's almost coming to an end. I'm not sure if we're going to have any extra time. But Steve, is there anything you'd like to add?
With regards to...
Well, digital identity in particular, you know, with your actual business.
Tying your stuff to identities.
Yeah, so, I mean, that's where we're trying to go. I mean, effectively, for me, there's two elements. So there's e-signatures. You receive something digitally, and it's like, is the person whose name is on that, whether it's a squiggle or whatever, the actual person who approved it? And then the second layer, which is what we're dealing with at the moment, is basically, are they authorized to approve it? You know, I received a document the other day, an NDA that was signed on a DocuSign. There was a squiggle, some guy's name, and it's like, he probably didn't even do that in the first place.
Oh, yeah.
And is he authorized to do it? Is that, you know, we've got like a legal agreement which effectively might not be valid because I've no idea whether that person's...
Yeah, that's a very interesting case. Yeah.
So that's the kind of, you know, the problem, well, that's one of the problems that we solve.
We're getting a couple of questions through Slido, so we'll sort of take them as we go. We have got some extra time, about 5 minutes before we hit penalties. Let's see, the first question we got is, maybe, I don't know if Ilya, you could answer this one in terms of, in your opinion, is blockchain secure?
It's secure to a degree, right? So it's vulnerable to a certain level of attacks depending on what type of blockchain it is, right? There's the 51% attacks, there's the 33% attacks if you're talking about IOTA. But at the end of the day, most of the hacks that we hear about right now, they're not because the blockchain got hacked. It's because it was some sort of an inside infrastructure misfortune, right? It's either it was an inside job or there was a weakness or a malfunction. It wasn't the issue of a blockchain. There was a number of times where there was a 51% vulnerability on the Bitcoin blockchain, but it wasn't used for that purpose. So I think over time it will become more secure, but I think our issues with blockchain right now are not because of the blockchain itself.
Absolutely.
Do you think it's a kind of case of education as well when it comes to blockchain? Because being as it's quite different technologies in ledger style, then it will really take off.
I think so, partially because right now, because it's a new tech, a lot of people are trying to sort of fix everything with blockchain. It used to be, it was very much unknown, and now everything needs to be tokenized. And now we're getting to the point where things are trying to be tokenized that don't need to be tokenized. So I think as education sort of proliferates, right, we'll get to the point where people understand what blockchain is actually, what it's used for, and what it needs to be used for, and we'll sort of, focus in on that area. But right now, we do have a lot of, extra stuff around.
Okay. Sure. Got an interesting question down there. Oh, Parker, do you want to jump in?
Yeah, no, I was just going to, the top question right now.
Yeah, the top one is interesting.
Yeah. I was going to jump in because I think it sort of moving to a digital identity, or, and I'll use any sort of, distributed digital identity where the banks don't own the customer data, and it'll enable them to move, a consumer will be able to move even faster and quicker in an onboarding process. So here in the UK, you have all the regulation there to make your account switching, everything incredibly easy. That will just accelerate it. And so it'll really drive to the best product, service, everything else for someone to be able to do something. I think in a place like the US, where obviously I spend most of my time, where the tech isn't even close to the levels we have here in Europe, that's much further off, and they're proactively arguing blocking any sort of really full digital identity coming to bear, because I think it will change loyalty in a big way. People won't stay with their banks for 15 years. They'll make more moves.
We've got another question there about the latest innovations in biometric authentication, and what you're starting to see in the landscape is both the physical side of biometrics, which is obviously a task in terms of facial recognition or voice recognition. They've involved a task, something you have to do whether you're being prompted or not. And then you have behavioral biometrics, which is monitoring your activity through a session. And this is what we call passive biometrics. So you're starting to see biometrics with behavioral being incorporated more and more in the identity space, because it's less hassle for the customer. They just carry on with their normal activities when it comes to accounts.
Well, I mean, that's the new product we're launching is called ScreenWise. And ScreenWise basically makes the use of your screen your fingerprint. So once you've got that mathematically set and you've got it integrated with the data set that captures your other biometrics and behavioral in real time, you cannot nobody can use a fingerprint or anything else, because you could have my thumb, whether you photographed it, modeled it, or cut it off, you could use it on a phone, but you couldn't imitate precisely the way I move my finger across my screen. That's
right.
impossible. So that's something that we've worked on and other people working on it. We're about to launch the product with a telco, and that is going to be something quite big, I think, in the future. Is it all right if I jump on the AI question? I saw an interesting, it's gone now. Oh, never mind. It disappeared. Didn't get a vote.
I think we're, Joshua, out of time for our discussion this afternoon. So, ladies and gentlemen, please thank the panel. Hope it's been interesting and educational for you. And come and see us afterwards if you have any relevant questions.
And have a look at the Twitter feed, #Fintech guys going wild with soccer analogies at Fintech Week.
Yeah, good.
I'm a fan, and no penalties for going over time. Thank you very much to Steve and his great panel.